Welcome back. You're watching Your World at 10. Now, private equity investments are bouncing back, it seems, in the year 2010. Research done by private equity investment tracking firm 4S Services shows that little over $4 billion were invested in the first 6 months of 2010. This is against $4.25 billion invested in all of 2009. Now, while this is still a far cry away from the peak of $19 billion that private equity put to work in 2007 in India, it does signal a turnaround of sorts. To talk about these trends in the private equity investment space in India, I'm joined by Ajay Jindal. He's Executive Director at 4S Services. Ajay, we've managed to do a pretty decent amount of investment in the first half of this year compared to what we did in all of 2009, right?
Yeah, clearly momentum is back in the deal space. We have done more deals, maybe 60 to 70% more deals than last year, and double the amount of we did the same time last year. And as you rightly said, we've exceeded the amount we did in the entire year last year.
What's driving this, Ajay? Were you able to pick up on any trends, on specific trends? Because, normally one would link private equity investments to, the sort of the sentiment prevailing in the stock markets. But we've had a turbulent few months, right from the beginning of this year. So what do you think is driving the quantum of investments this year in private equity?
Clearly, the appetite to invest in India has been there by and large. What I think has happened in the last few months is that the balance between the expectations on both sides, between the promoters and the investors, has been just about right. So the valuations are in a ballpark range where deals can be done, and therefore we're seeing deals getting done. And perhaps in a global context, India clearly is the favorite in the last few months. So the environment to invest seems to be right.
Are the bulk of the deals being done by global private equity firms, or is it most of the money is coming in from actually money raised in domestic funds here in India?
If you look at some of the large deals which have been done, these are all your global names like your KKR and Temasek and so on. The largest deal, which is more than 400 million in Asian Genco, they're all a clutch of foreign investors. KKR's deal in the cement company, again, one of the top 10 deals. So large foreign investors are putting in money.
All right, but you were also telling me in a conversation we were having offline that, more interesting than in the investment theme is the exit theme that seems to have occupied this year. Take us through that, because based on your data, I understand that we did roughly about 63 exits in 2009, which was at least 3 or 4 times the number of exits private equity was able to accomplish versus 2008. So what's 2010 looking like when it comes to exit strategies?
Clearly, that perhaps is the most singularly different trend in PE space this year. Exits in the first 6 months of 2010 are already more than 2009 entire year. And actually, if you go back, they are more than any single year since PEs have started investing in India.
Okay.
So again, there could be two things. The markets have run up, so maybe the environment for exit is good. And perhaps we are finally seeing a maturing of the PE space. If you look at the VCP space, it started picking up in 2005. Before that, it was very small. And so perhaps the investments which were done about 4 to 5 years ago, they have an implicit holding period of 4 to 5 years. And so maybe there are deals lining up for exit. And perhaps it's good that exits are picked up. So that there are not too many investors stuck for too long, and this could be a very interesting thing to watch for the remainder of the year. If exits remain strong, it also creates an environment for new funds to come in, because one of the things which we have seen so far this year is that the new fundraising has not been so good. A good environment for exits should definitely enable more fundraising as we go along.
So if new fundraising has not been so good for the year, are you saying that the large amount of investments that have happened of that total $4 billion has been of money sitting on the sidelines for the last year and a half, money that was raised maybe a year or two ago, but had not been deployed because of the, the sort of the great recession that was gripping the whole world?
Yeah, sure. In 2007 or 8, a good amount of money was raised, and maybe some of that is coming in. And over the last 2-3 years, perhaps the money raised Also, what we are seeing is increasingly funds are earmarking more money for India. So maybe in their overall global kitty, money available for India is perhaps increasing. So the pipeline of money available for India is perhaps better, even though new fundraising has been somewhat lower.
But how does that pipeline get impacted, or how does the quantum of investments get impacted in the second half of the year if new fundraising has not been very good? Because one of the other things that you noticed in the data, and you pointed out, was that deal sizes have been shrinking. In 2009, they've shrunk by roughly 40% over the previous year. That's 2008. Are we continuing to see smaller deal sizes this year as well? And how does that get impacted by the fact that we haven't been able to raise much new funds?
No, this year, actually, it's deal sizes have once again started rising.
Okay.
In the first half of this year, there have been 10 deals more than 100 million, compared to only 2 deals last year in the same time.
Okay.
And deal size has risen by maybe 50% or so. That is a positive trend. And would cash be a constraint as we go along? Perhaps not. I mean, appetite for India perhaps seems to be good. And we could see money flow returning to India in terms of new fund raising, if, as and when the situation,
improves in the marketplace.
We have a situation where, as and when you have a situation where existing funds sort of keep running out of, running out of money, and they need to close existing funds. They would, I suppose, go out in the market and raise more money. Perhaps money waiting to enter India would not be a constraint. It may be a situation where people are sitting on money and they have not gone around raising too much money.
All right, fine. One final question, Ajay, and that is what the big themes are this year. I noticed that last year real estate seemed to be dominating to a big extent, at least the big transactions that took place. Infrastructure, roughly 30%, I'm told, for the first 6 months of this year. Is that correct?
Yeah, in fact, even about a third of investments have gone into infrastructure, and that includes energy in our classification. So you have roads, ports, and power sector included in that. And clearly, power sector is the hottest sector in India at the moment. So we have seen one large deal. The largest deal is in the power sector. There's another deal more than $100 million in the power sector, which is that investment in Greenco. And between the two sectors, the appetite is huge. I mean, these two sectors alone can take more than $10 billion of PE investments. And of course, telecom is the third sector, which again has seen large deals happening in the last 6 months. All the three are counted within infra and infra space. And as we're witnessing, there's a lot of investment activity going on. So just this sector can absorb maybe 5 times more money than one has seen so far.
All right, Ajay, thank you very much for joining us and giving us a sense of what the first 6 months of this year held out for the private equity space. And let's see how the next 6 turn out to be. Ajay Jindal there of 4S Services. Time for a quick break on Your World at 10. We're going to come back with all the national and political news headlines of today.